Hello and welcome to Money Talks. I'm your host, Shllok Rawat, and today we have a very special guest on, the head of the portfolio management for one of the most unique and innovative finance startups in India, Mr. Hardik Doshi. Thank you for coming on Money Talks.
You're welcome.
We're going to talk about many different things today, such as White Whale's business and how it came to being, Mr. Hardik's personal strategies on investments, and finally the future on his outlook on the future of finance. So, Mr. Hardik, for my first question, could you please explain to my viewers who might not know what White Whale is and what do you all do in the company?
Sure. So maybe I give a bit of a background about myself, and then that'll lead into how White Whale came into being. I started my career at Lehman Brothers in New York in 2001. So over 20 years ago, I was with them for about 6-7 years. And it was just doing equity research, for the sell side, like as a broking community. And then when I moved back with Lehman to India, I spent about a year out there, and then I joined a fund called the Voyager Fund in 2007, and I was with them for 13 years. And really, for the 13-year journey, we went from being a long short fund, which is like a typical hedge fund, into being a long only fund. And then in 2012, we kind of changed our strategy and went from being a long only but a very concentrated fund, and started focusing more on qualitative aspects about investing, which is like the management team, the culture of the company, the competitive advantage. Just before that, it was more like event driven, shorter term outlook. And that's when, the kind of returns, the companies that we found, and the returns we delivered for the investors really changed dramatically. So after 13 years of being with Voyager, which was a FI fund, I decided I really wanted to kind of start off on my own, do something on my own. And that's when I met my partners, who are Shapad and Kunal. And I knew Shapad since 2001 in Lehman. And we decided, like, kind of, they look at the private equity side, and, in public market investing, I kind of looked at public market investing still with the private equity lens, which is more long-term investing. And then so we decided to kind of start the PMS together. So that is the whole origin of how White Whale started.
Okay, yeah. So then, coming from the point that you were working in the United States, did you find any difference in like the work environment and the culture and like finance as a whole in US in contrast to India? And like, did you face any issues with that?
Honestly, actually, no, I didn't. So firstly, I moved with Lehman Brothers in New York to Lehman Brothers in India. So from a firm perspective, when I initially moved, it was quite similar. I was still working for the European and US markets out of India initially for the first year before I left to go to Voyager. When I went to Voyager, it was an FI fund. Our investors were US investors. Our entire, team, pretty much, like, the founder and was from the US in terms of his education working background as well. So I would say it was pretty seamless. And maybe there's a difference in working culture among the Indian brokerages versus, let's say, the US or the multinational brokerages, but I didn't have to go through that.
Okay, so then you stated that you'll look at the public markets from a private equity lens. Could you like elaborate on what that means?
Yeah, so people think of public markets as trading, right? And people think of public markets as like, okay, oh, this is the next tip or this next stock that, like, might go up like X percentage over the next 6 months, because this is going to happen. And then, like, they want to churn with it, and they want to trade with it and hold it for like a short period of time. In the end of the day, public markets is, if you look at it from a private equity lens, which is what I'm talking about, it's really trying to assume that you're not going to be able to exit this company for at least let's say 5 years, right? That's how, when we decide to buy a stock, it's with the assumption that, okay, we're going to be in it for the long term. So we will go into a lot more in-depth analysis, a lot more bottom-up research, to really think that, okay, where's this company going to be 5 years out? Where do you think our earnings are going to be 5 years out? What is the kind of competitive threats that are 5 years out? Just like how private equity guys think, because in private equity, there's no exit option. There's no option to sell for a
Option,
long
right?
period of
Yeah.
time. So when you go with that mindset into investing into public markets, what you think about is investing into the business. You don't think about investing into the stock. So there's a very big difference in the way you approach things. Obviously, things go wrong. There are mistakes that are made, and the good thing about public markets is that it gives you that exit option. If let's say you thought that the story is going to be going this way and actually goes the
And then
other
it
way,
changes. Yeah.
and then you relook at it and you exit out, and so that is there. But when you're initially underwriting the position, it is more from a 5-year outlook. And even at White Whale, like, we only own like 15 stocks with a 5-year outlook. So literally every year I'm just buying 2 or 3 stocks, and that's all I'm doing, and selling 2 3 stocks. That's it.
So if you're not looking at only buying limited amount of stocks, A, would you all invest your own money? Would you all invest White Whale's money, or do you all have outside investors? And B, how, like, could you explain to me why that would be more profitable than let's say intraday trading, where you buy and sell stocks short to make a short profit?
So on your first question, White Whale has started with the principle that we will always put in our own money behind the same uh, ideas that we put our clients' money, right? So that we have skin in the game. So yes, like all my equity, active equity is in there. All my partners' money is also in there. Even when they do private equity deals, they put in their money along with the clients or the investors' money. So that, yes, that is definitely the underlying philosophy of White Whale. On your second question of why is this better than intraday trading? I at least strongly, in my 20-year experience, do strongly believe that it's very difficult to predict markets in the short term. It's extremely difficult. You don't know, like, there are different sentiments. Like, markets not only have fundamentals, but they have also human sentiments which
Yeah.
drive it, right? For example, right now, arguably we're in a very positive phase in terms of the sentiments, and there's a lot of euphoria about different things and different small cap, mid caps, crypto, all kinds of stuff, right? And just 2 years ago when COVID was hitting, I mean, the sentiment was absolutely bearish, right?
Yeah.
And the value of that company, or most of the companies, did not change dramatically over this period. So it's a lot of it is governed by sentiment, which is very, like, human sentiment is fickle. So it's very difficult to kind of gauge that. So I mean, different people have different ways of trying to invest, right? And I don't think there's necessarily an absolute right way or a wrong way of investing. But if statistics will tell you that, like, 90% of day traders will lose money, and that's because it's just very difficult to gauge human sentiment on a daily basis. But in the long, like, guys who are looking at investing over a reasonably long period of time will make money, because that is when the sentiments go out of the picture, and it's really the fundamentals of
The
the company that
fundamentals. Yeah.
really which really dictate the stock price in the end.
Yeah, so I really like the whole philosophy of White Whale, that you'll invest in your money with the investors' money. Do you think that whole philosophy is the reason why investors would prefer coming to you, because y'all are backing up what y'all do with your investors' money with your own money? And do you think that's the main reason why your investors would trust you with a lot of their money or their portfolio?
I mean, it obviously definitely helps, right? From an investor perspective, from outside, that the fact that we have skin in the game, definitely helps them in getting some kind of assurance. White Whale is, at least the public side, is a relatively new fund. We've just been around for about a little over a year. So from that perspective, besides track record, it is a comfort factor. Yes.
Okay, yeah. So then, on white whale, I'd seen it's just coming back from the question, coming back from the point that you said that you'll look at the long run. You'll always like to look at high quality stocks or like high quality companies. Can you like elaborate on what a high quality company means and what it takes for a company to be considered high quality?
Sure. So, I just walk you quickly through our investment philosophy. I think one of the things that in the last, let's say, 10 years of investing, one of the things that I had a great learning about at Voyager was that, firstly, people make companies, right? And then, so to that extent, when you're buying into a company, whether you like it or not, you're actually backing the management of the company. So getting a good understanding of the management, the quality of management, their decision making, their ability to allocate capital is extremely important, right? Second thing is that if it's much because of our long term investing horizon, you want to be able to back companies that have a sustainable competitive advantage, which means that they can actually make return on capital, which is much above the cost of equity over a long period of time, and that causes them to kind of continue to deliver steady earnings growth, and compounding of earnings growth catches up in a very exponential way. Um, so when we talk about quality from that perspective, we're talking about companies that have a high bargaining power over the suppliers, or their clients, companies that are have been able to get a disproportionate pool of the overall profits that industry makes. So let's say if you're let's say in the automobile industry, for example, and you account for 80% of the entire profits that are made by the entire automobile industry in India, it's going to be very, very difficult for somebody to come and dislodge you, because you need a lot of capital. You need to invest into breaking down the competitive advantage that you have of scale. And so to that extent, if you can't do that, and you think that there's a long runway for growth for, let's say, cars in India, then you're going to be continuing to grow. So that's just one example of it. Another advantage in terms of quality is having some kind of a technological advantage, which nobody else can replicate. So there are different forms of competitive advantage that we try to find for in a high quality company. But I think before looking at a high quality company, it's very important to understand the management.
Okay, so then talking about high quality companies, recently in the market, there's been a lot of buzz about one specific company, Nika, because Nika they IPO'd in October of 2021, and now they're in the top 50 most valued companies of India, taking over companies such as Britannica. Do you think Nika is overvalued as a lot of people say it is, or do you think it's a high quality company that people should look at investing in for the long run?
Sure. So let me start with talking about the new digital companies. Then I'll talk a bit about Nika. Uh, you know, as I said, technology and the disruption that technology is doing around across industries is something that has only been increasing over the last 5 years, right? I mean, ever since the smartphone came and the whole ecosystem and telecom, and I mean, there's all kinds of stuff that's happening. I mean, 10 years ago, you might not recollect this as much, but I mean, like, we used to not even have a smartphone, and I mean, the internet was around, but like the way that we are so dependent on the smartphone today for anything and everything that we do is just a revolution that's just starting, right? So from that perspective, I think digital companies are here to stay. They're going to be growing exponentially, and in the long run, they're going to really come and dominate large parts of the economy, right? Now, coming down to Nika and this, you take Nika, you take Zomato, you take a lot of these new companies that have gone IPO. There is no profitability, or at least not any meaningful profitability that is there right now. Zomato is making losses. Nika is just about break even, let's say. But I think that and that this is where this whole private equity lens kind of comes into picture. What you're trying to do is imagine the world 5 years out, 10 years out, and whether they have a right to win, a competitive advantage, right? So I think, let's say if you take Nika, I mean, first things first, looking at our investment philosophy, as I just mentioned before this, first things first, look at management, right? Falguni Nair, she was like, heading Kotak in the investment banking. She's a first generation entrepreneur. The track record of hers is impeccable. Her capital allocation decisions, her ability to really kind of the culture within Nika, I think it's great, right? So I mean, in terms of management, it ticks a lot of boxes. Second thing to look at out here is a competitive advantage and can it sustain. Um, I think what Nika is doing is way ahead of it's a network effect, right?
Yeah.
They have influencers, they have a lot of people that are put creating YouTube content, which is helping women understand how to use their beauty and personal care products. Because of that, guys like Estee Lauder and all these other brands, cosmetic brands, are willing to put their products even in the initial years on exclusive basis, and giving and a whole inventory to Nykaa, which in turn is attracting more customers. And so there's a whole flywheel network effect
Yeah.
that's going on. And it's very difficult to dislodge it given that they have such a huge first mover advantage out here. And because of that, and now they're coming into their own private label and launching that as well, and they have a captive audience to kind of sell to. It's very difficult to kind of set up stores in tier 2, tier 3 towns, versus like, okay, you can set up like a cosmetic store in like Palladium in Bombay, and there is enough customers. But if you go to a small town like Kanpur and like do that, I mean, the unit economics are not going to work that well.
Yeah.
There are a lot of great things that are going to be very difficult for any other company to come, at least in the beauty and personal care product. Lastly, is there a runway for growth here? I mean, the per capita consumption in India for beauty and personal care for women is extremely low. Lifestyles are changing. Youth is getting more money, income because of various reasons, and they're going to spend it. So I think the runway for growth is very long. So overall, if you ask me, I think Nykaa is a great company. Is it overvalued? Maybe in the short term it is, right? But if I have to look at it from a 5-year to 10-year perspective, I think there's a lot more value to be created out there.
Yeah. So one thing that I'm very interested about in your company is you spoke about how tech is going to disrupt a lot of industries, and you talk about long-term investing. But how does your company feel about like digital assets such as like NFTs or like cryptocurrency? Because cryptocurrency is like one of the main ways I think that like our youth is starting to learn how to flip money, where they buy an NFT for less amount of money and then sell it when the price goes higher. And a lot of people have started to gain more interest in this space because it's just in the beginning and it's just starting to gain traction. So what do you personally and what does your company feel about cryptocurrency and other such digital assets and stuff?
So I'm in the business of investing in businesses, right? Which means that I want to allocate capital towards companies that fulfill a need, right? It could be a product or it can be a service, but a need for the economy, correct? And when they fulfill that need, they generate cash, and then I kind of take the present value of the future cash flows, and that's how a stock is valued, right? For example, if I think any company is going to generate, let's say, $100 over the next 10 years, I use a discount rate, put it back, and that is what I think should be the fair value of the stock, right? There are cash flows that are involved. Cryptocurrency and NFTs are, in my view, a little more similar to like investing behind gold or investing behind art, right? Gold in itself doesn't generate cash, right? Gold is a store of wealth.
Sort of value.
Art, yeah, a store of value, and art in itself doesn't generate cash, right? It is the value of a piece of art is dependent on buyers and sellers and how much, like, demand and supply in terms of how much you want that piece, right?
Yeah.
So, I mean, we don't, it's not our business. That's not what we do. We don't understand it, honestly. And because I don't understand it, I don't have necessarily a very strong view on where it's going to go either this way or that way. uh, People who are interested in it can do their own research and look into it and have their own viewpoints, right? um, I don't know. Are you asking me what do I think about cryptocurrency and NFTs? I mean, I don't understand the gold market. I don't understand the art business. I don't understand like a lot of those aspects, and all of this falls in that same category, right?
Yeah.
So I don't spend too much time, honestly, speculating around that.
Yeah. So since you talked about companies, like your investment companies, how do you all feel about crypto companies? Like for example, Coinbase is, I think, the biggest one where it's become like a money control for the crypto world, where where if anyone wants to buy any sort of cryptocurrency, it's from Coinbase, and like OpenSea is that for NFTs. So how do you all feel about companies that are working on companies that are working on buying and selling of cryptocurrencies, or companies that are using cryptocurrencies to generate revenue, which is not in crypto, which is in cash, and specifically in India? How do you feel about that?
Sure. So, I mean, in the end of the day, Coinbase is going to make as money dependent on the extent of interest that is there around cryptocurrency, and the amount of trading that happens there, right? Because they make a cut out of it. Very similar to NSE and BSE in India, like as a stock exchange, correct? I mean, like the more people that are trading in the stock exchange, the more they make money. The only difference out here again comes down to that from an NSE perspective, the growth in the value that's traded in the NSE is dependent on how the Indian GDP does and the GDP growth. Whereas
Yes.
for Coinbase, it depends on the extent of interest that is sustained in cryptocurrencies, right? If I so the end mark the revenue driver for them is cryptocurrencies, and since I don't understand like I don't have a particular viewpoint on the sustainability of this whole cryptocurrency and NFTs, I'm going to stay away because I can't predict demand 5 years out. It could be 10x or it could be zero. I don't know.
Zero. Yeah.
I really don't know. So I would not invest into it because I can't predict the demand.
Okay. So, for people my age who want to just get starting into investing in the stock market and other such markets, you spoke about how we need to know the company, and like we need to, because stocks are basically they're basically a fragmented piece of the company. So you need to you need to buy into the company. What's the best way for someone, like for example, let's say I don't know anything about stocks, like the only thing I know is about these companies, and I want to start learning about the market and I want to start trading from this age. So, what do you think would be like the first thing that I should do?
So, I mean, firstly, is read a lot of investing books, right? And get your knowledge. And going through maybe a few there, like, and now in like with Coursera and YouTube, I mean, there are enough, there's enough content online itself that can help you in really understanding, firstly, how stocks are valued, right? Then secondly, understanding how businesses are valued, how everything works, right? So that's first thing that I would recommend, is get your fundamentals straight. Second thing is, it's great at this age to start investing, but again, what I do see among a lot of young people is they want to make quick money, right? Which is and there are cycles. Having worked for 20 years in the stock market, I've seen, like, let's say the 2001 to 2008, maybe arguably 2014 15, and now this one, right? There are cycles of boom,
Yeah.
and that is when suddenly everybody everybody wants to like be part of the finance market. And then when the bust happens, everybody's like, oh, we're looking at other avenues
Yeah.
for their career, etc. um there is fear and there's greed, but in the end of the day, in the long run, both of them even out, and there is a steady trajectory that is there. So what I would suggest is that besides getting your fundamentals together is, yes, start investing. But when you're investing, don't try to think about like, making money in like 6 months or a year. I mean, investment is also a patience game. If you found the right company, backing it, track it every quarter, and really understand, what that company is doing, what its competitive advantages over a long period of time, and then be patient with your money. Don't try to flip. I think if you follow those two things, it'll help you a lot in becoming a better investor.
Okay, so then you talk about finding a company. Exactly, how exactly would you find a company that's like not like for example, everyone knows about like a Reliance, um, and or an HUL, and everyone knows that it's like a safe place to invest. But how would you find like a newer company that you invest in, and how do you personally go ahead with market research?
So, the best place to find ideas is to talk to people across within different industries, right? So, for example, let's say I have invested into a company XYZ, and I'll go and meet with their management, or I'll go meet with their mid management. And at that time, you ask them as to who else is doing good in your company, or who's a good supplier to your company, or who's a good, customer to your company, right? And that is when you get the best source of ideas, because if they know the industry well, they know who's doing the right things, who's doing the wrong things. Talk to your network of people, like I would know a friend, for example, continuing down the path of automobile, like I know somebody who's a supplier to uh, automobile companies, right? And I can talk to them about, like, within auto components, who's doing well and who's not. And they will be like, oh, what, look at this company that's doing good. So that is the first source of idea. Second source of idea, I think, is also to talk to other smart buy side, like fund managers, right? Because this is the way I'm trying to find good companies. They're also trying to find good
The
companies. It's a
companies,
big
right?
open market, with lots of players. I'm talking about fund management industry. There are lots of players. So it's always good to have a network of people. And that is, for me, the primary source. And the last one is occasionally, like, reading. If I keep on reading, and let's say I'm reading newspapers all day, I'm reading books all day, I'm trying to think like, okay, you know what, in 5 years, I think, electric vehicles going to pick up, or like, let's say, green hydrogen is going to pick up. Then I'll actively look, because I mean, that's a theme that I'm trying to back. So yeah, it's your own reading and your network that helps you source ideas.
Okay. So you talked about reading. Like, what exactly do you like to read? Like what kind of books you like to read? Like personally, I used to be very interested in reading fantasy books, but like now I've started to read more books on investment and money. So what are the different type of books that you read, and what are some recommendations of books that you can give to people in general?
So I used to read a lot of investment books, right? And there are obviously several investment books that I can recommend. But honestly, right now, I just kind of read different books in different subjects. For example, right now I'm reading Stephen Hawking's A Brief History of Time, right? I mean, there is nothing to do with investing, for example, but it just helps you in understanding all kinds of things that go on about the world, right? In terms of just purely in terms of investing, I would say there are a lot of great books. There is, 100 to 1 in the stock market. It's by, Thomas Phelps. I think that's a really good book. There is, Peter Thiel, 0 to 1. I think that's a great one as well. There is, You Can't Be a Stock Market Genius by Joel Greenblatt. Um, there is, just trying to think of a few more. Um, the Most Important Thing by Howard Marks. The Intelligent Investor by Benjamin Graham. Um, so there are quite a few of these, right? But
Yeah.
what I would suggest is, like, that before you start um, going down that path, is first to get your fundamentals in order in terms of, what is investing, how are stocks valued, how a company is valued. I mean, get that first. And once you get that fundamentals, then it's about, like, the next second level of thinking, and which is where these kind of companies really help a lot.
Yeah. So my last question for this podcast would be, I was looking at White Whale and I saw that you all have an investors network, or an investment network. It's a very interesting concept. Could you like give me a short brief about what it is?
Yeah, so an investor network is more on the public equity side, right? Which my partners run. Where basically the idea out there is that they will scout for private equity opportunities, right? Private equity opportunities for HNIs is quite rare and difficult to get. So what they do is that they have a bunch of members, right?
Yeah.
And so you'll have about, let's say, about 100 odd members, and let's say they like a private equity opportunity that looks interesting. They will first do their own research, decide whether they want to put their own, like, you want to commit white whale money behind it. Once you decided that, then you will go to the different members and you'll be like, okay, this is the idea, we're putting in the money. If you're interested, you can put in money with us. If you're not, you can pass. And
You
so
can
the
pass.
members
Yeah.
will go through it, evaluate the idea, and they'll be like, okay, you know what, yes or no. Then the people who are investing, you will pool the money together and invest as a group into the company. And then what White Whale will do is that they will track the company for 3, 4, 5, whatever years that the private equity investment is for. Give some inputs to the promoter in terms of their viewpoints and how to better manage or handle the company. And they will also help the members who are put in the money in terms of finding an exit, right? Because that's the end goal 5 years later. So you manage the whole process for them. And the advantage is that members, like, unlike a private equity fund where, every, like, you when you put in money and then the uh, managers have to invest all of it together. Out here, you could like, the member gets an option to invest on a deal to deal basis.
Yeah. I think I really like the whole idea of white whale, and I love your personal philosophy on investing. I think it's very interesting, and I think I agree with a lot of points that you talked about, how how a lot of people are now looking at it as a short term thing and how to make quick money, but then a lot of people, including you, have stated that it's very hard to make quick money in the market and you have to be consistent. So I really like that. Thank you. This interview was amazing.
Thank you for having me over, Shlok. And it's a great initiative that you're doing, and I wish you all the very best for it in the future. And I will be following you to listen to other podcasts as well.
Yeah, thank you so much.